Hello, welcome to Horse Race Investing, and this is a new series where I'll be taking to $20,000 to $100,000, and that's probably the goal within the next few years. I don't think it's good to make like an exact time limit because that's just not how the stock market works, and I think most of you guys know that. And I guess I wanted to do this series to talk about like I think there's so much potential in the stock market with like the return rates if you're willing to take like a certain amount of risk and expect and you have your expertise in like let's say you have an edge in the market. I think there's a lot of money to be made that people don't talk about. And people really don't like show their accounts and stuff like that. A lot of people I see on YouTube that I've watched, they give all this advice and stuff like that, and then once like let's say the stock doesn't do well, they just leave and then they just go to the next thing, right? But I feel like there's not like that much honesty in like the space and stuff like that. So I feel like it's better if I teach people how to fish than just like and actually show the process of like how to grow the account, right? So here I have an about I deposited an amount of money where I would say is like a good starting point for people to actually be able to create wealth. So I put around $20,000 to $21,000 into this account, and I've been growing it for like a week or two right now. And right now I'll talk about a few positions and what I think about like the market overall. And so right now I think the market um there's not as many opportunities as before right now. So I think we're in a like period where you have to be pretty selective in the stocks you buy. So let's say like let's look at the biggest all these stocks. So let's say the 1 year performance. So we see all these stocks are really green and stuff. So that I'm not saying the market's like overvalued. They could run even more, but we have to understand that there has been a run up with all these tech stocks going up like 200%, 100%, and like a lot of like stocks have like doubled in the past year. So you have to be pretty careful that you're not buying into increased expectations on growth and getting screwed over, right? So the goal is probably right now to find a few opportunities and then really put your money in and wait for those really good deals to come. So I'll talk about the stocks I have right now. So right now I've invested in Humana. So how I think I can grow this account probably faster with just there's a decent amount of risk with this too, but I think I will be right, or I know I'll be right most probably, right? So overall, Humana, I have these call options on them. So we're gonna use Leap call options. So my account they'll be into 2026, so they're like almost 2 years out. So I can see really what happens. So like my strategy is more pick the best stocks and wait 2 to 3 years. If there was like 5 year calls, I would buy that, but the 2 years is the best I there is. So the longest. So I'd say overall these calls, mostly with Humana, I'm looking for a pretty good recovery here. So overall the Medicare Advantage program that the government does, basically they didn't increase like the rates as much as like people expected. So companies like Humana, which are really deep in that sector, and companies like CVS are getting killed right now. But I think Humana can will be fine long term. I think it's a really good long term industry for the health insurance providers. So basically, overall, as we see here, I think this is also a pretty good what was it acquisition target. So there could be a random 10 to 20% spike on an acquisition if so. Basically, Cigna was the company that was gonna buy Humana, but what happened was the deal got cut like late last year. Basically, like it was like around here where like basically they said they were gonna buy Humana for like a lot of money, and then their stock fell because like the investors didn't think they thought they were overpaying for Humana. So then the stock fell, and then they cut the deal, and then it immediately went up a lot because of, they said they would do some like $10 billion buybacks, so which is pretty good for them. So then overall Humana now, after the acquisition didn't go through, it's taking a pretty big dump of around 35%. And they have had some bad earnings reports too, which isn't good for them. But overall, long term, they'll probably be fine. And there might be a chance, I've been seeing in separate places, that there's a chance that Cigna goes back to this deal because the price is looking good at $339 instead of like $500. So they might buy it for around $450, $470, for like I think if they buy the company, they'll do it right around $470. That's the range, and that's pretty good upside. So that's why I have these 470 calls. So that was mostly my thesis on Humana, like a quick thesis so everyone can know. And overall, the other stock I have right now is Ulta Beauty. And I think this is a good long-term hold that I have call options on for 2 years too. So here we see like around a 30% dip here. And overall, Ulta, it's a very consistent revenue growing company they do a lot of share buybacks. I'll show it right here. So you can see it right here. They do a lot of share buybacks right now. A lot of share buybacks, 5%. They're buying a lot of shares back because they have a lot of profits right now, excess profits, and they're paying it back into the business, putting it back into the business. And overall, people are scared that like the demand for like the beauty stuff will go down. But I think long term, people will just keep spending on beauty and all this stuff like that. I think it's almost an indestructible industry long term. And there's not really much competitors that getting into Ulta. There's some like things talking about e.l.f. and they're gonna get into but like people think they're a competitor, but they just work with Ulta. So they just like put their stuff in Ulta's like stores and stuff like that. So it's a win-win for both. So overall, people are just scared that beauty lipstick demand is slowed down recently, but overall it probably will recover long term like it always has. So the goal of this portfolio is probably to find long-term compounders at a dip and try to get them and buy 2 to 3 year call options on the recovery. So let's look here. So let's go to this call option and you estimate the returns. And I think the best thing to understand is with call options like this, you got to understand you might lose your money. If it doesn't go right, you might lose all your money. But that is the risk for how much of the gains I'll show here. So you have to understand it's kind of like you might just lose the premium. So you probably want to invest money you can lose. So let me show right here. So let's say it goes from $335, $340 to right around $450, right? And the calls were showing them worth around $1,600. So even if, let's say in the next year it was to go there, it would be worth around $4,000 to $5,000. So it's more than almost triple. So it's like there's a lot of upside here if you're right. And then only one out of these 2 plays would need to be right for me to still make a good amount of money. Because even if I lose 100% on one position, if the other like multiplied by 4, you would still make a really healthy return, very, very good returns. So overall, I think this is going to be my first episode, and I hope I'm going to keep making more videos like this, like a part 2, part 3, and keep going and show how the portfolio grows, or it goes down and then comes back up. But I hope you guys are here for the journey, and if you guys watch this early, I think it's better for you guys the most because you'll be able to learn, see how the portfolio goes. So I hope this is an interesting test that I'm doing, and I hope you guys find value in what I do. Yeah, thank you, and thank you for watching.